My name is Kevin. Today I would like to introduce accounting for receivables. Most accounts receivables are recognized but uncollected revenue created by the accrual accounting entry debit accounts receivable and creates a sales revenue. Such receivables arise from the company day-to-day business activities and are therefore often called trade receivables. There are also other receivables such as notes receivable and loans to employees, tax refund, etc. They are included in their current assets because they are usually expected to be collected within 1 year. Receivables are valued as the lower of the cost, or net reliable value. Cost here refers to the original transaction value of the sale that gave rise to the receivable, plus any subsequent interest charged. Net reliable value is the amount expected to be collected. Companies often have trouble in collection, especially as time passes after the sale. So if the collectible account is now expected to be lower than originally anticipated, the receivable must be reduced to an estimated collectible amount. The method for doing this involves subtracting an allowance for doubtful accounts from the account's receivable balance. The general entry for the creation of an allowance for doubtful debts based on some estimate of the likely life of the doubtful debts is the debit bad debts expense and create allowance for the doubtful debts. Note that allowance for doubtful debts is a country asset account, which means when we increase the allowance, we are actually reducing total asset. When a company fails to collect the payment of the $100 and decides to write off the account, another journal entry is then needed by debiting allowance and credit accounts receivable. The estimated collectible amount is the gross accounts receivable minus the allowance for doubtful debts. On the balance sheet, accounts receivable are valued at this net amount. For example, texture in this balance shows receivables of the $5,018 million in the current asset section. This amount is net account receivable, and its breakup is shown in note 3.3 of the accounts as shown on the slide. Thank you.